Weekly update of the New York softs market, sugar, coffee, cocoa, cotton. I'm Rich Paz for Critical Point. It is 6:32 a.m. Eastern Time, April 22nd. Let's begin with the sugar. And we have the continuous or spot or prompt chart of sugar. Perhaps a minor long-term top, bear market. Came down to level 1 bottom. Came up to a level 2 top, meaning not as important. Came down to level 2 bottom. Came up to level 1 top, which is a little unusual not to have such a large run-up unless you're in a bear market and the market had been high-priced during the bull market, which, of course, most bull markets do go to an extreme. So the market's coming down into a level 1 bottom. The model is saying it's possible. It doesn't have to go much lower, but it does allow all the way down into about 1690, 80s or something like that. And the 5-week average is nearby resistance where it can bump its head. It seems overdue for a level 3 rebound, but not doing very well so far this week. This is the last week for the level 3 rebound. I'd be a little concerned if it starts taking out last week's low. The rebound was right in there, buried in on the way down, and that could be quite bearish. My guess is there's really not much downside here in sugar, but it does not have to bottom until as late as the week of June 3rd. I suspect the market bottoms during May. And weekly indicator is saying it's oversold, so there could also be some microeconomic undervaluation going on there. But that's a bearish acting indicator. So far, it is warning a chance of lingering near-term downside momentum next 1 to 3 weeks. Other than being oversold means, seems like they would put the brakes on. The indicator's telling us start to look for a bottom. Trend line can also be resistance, and you could draw another one across the level 1 top for fanning type trend lines. And yes, there will be a bounce by June, I believe, in sugar, but it can be down for a little while longer here into that bottom. I think that it will show up in May, even though the model's saying April 29th week of might be the earliest for bottom in sugar. All right, let's move on to the coffee market. And for the coffee market, the model's saying it is the time for level 1 top. It could extend all the way till week of May 27th. That seems too long coming from this level 2. So I think the model is, over time, going to concentrate on the first half of this time zone right in there for a level 1 top. Price-wise, it went above our price target, came back into the price target for the close of the week. That's fascinating. We're starting the week out in it. We get a gold star for the price target already, and it is a warning that we should assume still higher prices. But when the model puts everything in the kettle in the pot, it's coming up with the idea of we may have seen the highest price, and now we need to put in the business cycle top, and it might occur right here, right now. Now, level 2 bottom, unfortunately, is due at about the same time, so that can make things confusing unless it's going to top early, bottom late. Then that would be a nice sell-off. But if they were to come in very close to one another, I'd be concerned. That means it's going higher still later this year. However, because we are looking for level 1 and we're not picking up signs it's an abnormal level 1 where we would have a level 2 there, and then extend it further, not picking up on that, we do have to consider this level 1 can truly be a level 1, and consider that a level 1 anytime this year should be considered for at least a minor long-term top, if not a major long-term top in coffee. Now, Robusto, of course, is helping to drive this more than anything. By the way, this indicator is overbought, and rolling over for a sell. It is suggesting we have a right to look for microeconomics and fundamentals that suggest at least overbought, if not overvaluation in coffee. So now, let's bring up the Robusto. Robusto, no model analysis, 5-week average well below it, trend is intact, curling up even a faster pace, even more bullish, but it's also overbought. Don't particularly care for running out on this open interest, but it could be just because of the contract, and that's apparently not total open interest. This charting system keeps playing games with me and flipping on me. Unbalanced volume, very old method, but it's just saying, hey, it's bullish, it's working fine. Really, the only thing going against this is an overbought market. So tell me, what is it fundamentally worth? And then I can use that probably to give us a better idea of the more standard coffee contract, which is what I've used for decades here. The Robusto is new to me in terms of a futures contract. All right, let's move over to the cocoa market. And trend is still intact, still a bull market. It's nothing but a guessing game how high it will be. For speculators, investors, I think it's a day trader's market only. I almost think the same thing for commercials. Stay short term, short tail. Huge bear market coming someday, may last for many years, but it could be very slow coming down because there is definitely serious damage. But just as the headlines over the past 30 days, about starting 30 days ago, finally we started seeing national, international headlines. In other words, the news reporters pretty much missed most of this bull market, and so that can be a contrarian sign of an end coming. Now, in just the last week or so, there was an article out of how farmers in those damaged areas, those damaged countries, who got out of cocoa production are getting into cocoa production. Some of them are very large, can handle many different types of crops. So we're going to buy a recovery, but what of all the disease issues? Maybe not so much of climate and weather issues. Something to think about. All right, let's wrap it up here with the cotton market. And with the cotton market, we've done some major revisions here that I didn't think we would do. This is now a level 1. This is now a level 2. This is now a level 1. And the model is very, very comfortable. Many thinks it makes sense. We're ready for another rally here for this spring and summer. It may be minor, it may be huge, we don't know weather-wise, but I think this is too low of a price. I think it's robbing from the bullish possibilities this summer. I think it should go above this level 1 high, but I don't know if it's going to do much more than that. This should have been a firmer moment here so far this year for cotton to be a major long-term bull. If you study the history of the characteristics of bull markets, there's been a few that was just sleepy right into the growing season and even late growing season, and then just bam, straight up, and then it was all over. But in my opinion, if you probably look at the amount of damage done, it should have been much higher than that. That even though it was fantastic bull market and people had a lot of fun with it, made some money with it, and some people got hurt a lot, it should have been more than that. And it's basically because you don't want a commodity in the U.S., crop commodity, weak during the first half of the year. You want them to show some firmness, a stability, if not up, and then get your crop problem. You're going to get a much bigger bull market. Now, that's primarily based on the grain markets, and the grain markets did the same thing this year. There's definitely many of these commodities look like they are in perhaps major bear markets for years to come here. But that doesn't mean down, down, down. It just means range trade and just means difficult to crank out a record high or even visit a record high. And I think that makes sense. At any rate, we are looking for a level 1 bottom in cotton. It should bounce briefly for a level 2, pull back for a level 2, and you might be surprised to see that level 2 actually be a little downside, shallow, maybe even bottoms on the way up. And then it should bounce, and this isn't a correct location, I just stuck that in there, but it should bounce into a summer top for cotton. Weekly indicator oversold, telling us we have a right to look for microeconomic fundamental undervaluation, and at the very least to look for oversold, and then technically it is oversold, and it's turning to a buy signal and starting to spread as though it's getting ready, a warning of a rally, but it's not bullish enough to say, yeah, I really ought to go up the next 1 to 3 weeks. But I wouldn't be surprised. Cotton bottomed last week, so I'm not going to write it down, but I'll just say somewhat of an alert there, a warning. You may want to go shopping if you are feeling bullish. Just realize they may have to set it back on us into next week for a level 3, because this could be a level 3 here. This could be a level 3 this week. Pull it back for level 3, and looks like the latest that ought to bottom is May 6th. But if you like buying commodities, I think you want to pay attention on cotton. It may have something to trade, at least within a range, okay? Trade to the upside. I think there's more upside in cotton than downside. Now let's move on to the, what do we want here? Monthly charts give you a little long-term update. There's the sugar chart acting beautifully for a bear market into late this year, on into next. I think it should be on into next. Can rebound back to this line, above it, back to this resistance. There's all kinds of things going on. but it seems too late to me for a a long-term number 3 minor long-term bull market to interfere with this. I think sugar just wants to go down and get this over and done with. But watch some of those foreign markets. That's the only thing that will actually drive this higher. I don't believe the U.S. sugar production is going to run into any crop issues, frankly. And I suppose, though, we have to, as always, keep an eye on South America and some of the southern hemisphere. But I'm thinking more over in the Asian regions. All right, let's move to the coffee market monthly chart. And this one, of course, give us some problems here. I moved the LT1 from there to there just to be safe because, yes, it may go up all this summer, okay, and then down. And this is a strange one in that, for some reason, the market apparently knew not to go below that long-term low, not to give us a problem. Because really, this is too high. This should only be a minor LT3 bull market, and it may still be. If it does not take out that high and then comes lower for quite a while, we'll probably flip these back. Really doesn't matter. Just think in terms of a long-term top is due during this time frame. I think this is no more than a respect to the Robusto market. I don't think this specific contract really wants to be all that bullish. And look at this. It's rallying against an indicator that's trying to be bearish. It may turn bullish briefly and then bearish. But I just don't trust this for coffee. And this line here, however, will allow for a new high. It could be that high. And if it does, we'll trigger something up in this area as well for additional targets. So it's there. It has the possibilities, but don't particularly care for it. Really, coffee should be something like most of the commodities, and sugar, it ought to move down into a bottom next year, whereas sugar could do something as a bottom late this year. All right, let's move over to the cocoa. And I really don't have anything to say here. All right, someday we'll get a bear market. It should be lower next year. And then we'll move over to the, what do we want to wrap it up with? Cotton. And in the cotton market, a little discouraged. It met the minimum price target, okay? And it should rebound to that price target, if not higher. But do keep in mind, it could be one of those years that's just a retracement of this bear market. We don't get any kind of significant crop problem in the world, and it just goes lower into bottom next year. It may not even bottom to harvest late next year. Okay, but I think it can at least go lower into early next year. All right, so that's our long-term scenario and those markets. And the commodity indexes are pretty much supporting us on this, that any rally in these commodity indexes and for some of these commodities is just into a minor long-term top that fits inside of a mid-size and perhaps even major-sized long-term bear market. Past results are not necessarily indicative of future results. Have a great day. Thank you.